Welcome to today's Explainer. We're diving straight into the absolute chaos of the July 6th, 2026 crypto market. But we're not just going to stare at boring charts today. I want you to picture this like a high-stakes cyberpunk anime battle playing out in vibrant comic colors. We've got massive institutional titans clashing with hyper-advanced tech upgrades. It is wild out there today, so let's plug in and see exactly how these battle lines are being drawn. Okay, we're kicking things off with a massive system alert. The Crypto Fear and Greed Index just tanked to an extreme fear level of 24. Whenever we see a number this low flashing red on the dashboard, it tells us the market psyche is, frankly, completely rattled. It sets the stage for some serious volatility. Now, historically, this extreme level of fear means we're either staring down the edge of a cliff or we're getting right near a major foundational bottom. And you can see that battle playing out right here in the trenches. Bitcoin is basically trapped in a structural downtrend right now, fighting a massive war between major psychological support at 60 grand and a critical recovery zone up around $63,000. The bulls and bears are just going at it. If that 60K digital armor cracks, well, we could see a really rapid descent.
Part 1. The Fall of a Titan. A sentiment shockwave hits the market. For years, the narrative around the corporate giant strategy, formerly MicroStrategy, was that they were this unstoppable one-way accumulation vehicle. They just bought and bought and bought. But suddenly, the market woke up to treasury risk. The whole narrative has totally flipped, and now traders are eyeing them as a potential seller who might actually liquidate assets to cover their own real-world financial liabilities. And that shockwave hit hard when Strategy revealed an unprecedented sale. They actually liquidated 3,588 Bitcoin, which is roughly $216 million, just to fund stock distributions and replenish their USD reserves. Now, sure, they still hold a colossal treasury of over 843,000 Bitcoin, but this move totally shattered the illusion. It proved that even the biggest corporate titan will shed some of its digital armor when it needs cold, hard cash. To compound all that chaos, the broader economy threw a massive curveball onto the battlefield. The US added a shockingly low 57,000 jobs in June. That's a huge miss. But as we know in the crypto arena, bad macro news is kind of good market news, right? Traders instantly bet on a dovish Federal Reserve, and that created this violent whipsaw effect. We literally saw over $450 million in brutal short liquidations across the ecosystem in a flash. Just a massive leverage flush.
Section 2. The Mecca Upgrade. Ethereum's Lean Evolution.
So, right in the middle of this clash, Vitalik Buterin unveiled the new Lean Ethereum roadmap. Honestly, it's like watching a mecha get equipped with futuristic armor. This multi-year overhaul gives the network quantum safety cryptography. It makes transaction privacy a structural default instead of just a clunky add-on, and it uses recursive Starks to make data verification hyper-efficient. It's a total foundational redesign, preparing the network for the next decade of digital combat.
And man, the market absolutely ate this up. This massive upgrade generated explosive momentum, pulling in a record-breaking $2.85 billion in Ethereum ETF inflows in just one single week. All that fresh capital hit the market like rocket fuel and drove a stunning 12% price rally for Ethereum right when the rest of the market was slumping.
Which leads us perfectly into Section 3, Capital Rotation. The battlefield shifts to altcoins. We basically just witnessed a massive one-day power drop. Bitcoin dominance fell from 59.9% down to 58.7%. Now, that might sound like a tiny fraction, but in this space, that is a huge wealth transfer. It signals that capital is actively fleeing the heavy, sluggish titan and rotating straight into high-conviction infrastructure plays and altcoins. As traders retreat from Bitcoin's structural downtrend, they're aggressively deploying their capital into these surging altcoins. I mean, look at this. Solana is up over 14%, Ethereum is up 13%, and even Dogecoin caught a 5.4% surge. This coordinated altcoin offensive pushed the total crypto market cap up to a staggering $4.13 trillion. All right, Section 4, Regulatory and Cyber Shadows. Hazards in the system. Keeping things completely neutral here, but just looking at the objective legislative reality, the much-anticipated Clarity Act is currently stalled out. Analysts are giving it exactly a 50-50 coin toss of passing before the end of 2026. And without those clear rules of engagement, institutional capital is basically left stranded in regulatory limbo. The market just can't find steady footing when the rulebook is up in the air. Meanwhile, deep in the digital shadows, security researchers at Zscaler just uncovered a wild new threat called an indirect prompt injection. Forget hacking a database the old-fashioned way. Attackers are literally planting invisible traps on regular websites, just waiting for your helpful autonomous AI agent to read them and get silently brainwashed into doing exactly what the hacker wants. It unfolds like a cyber heist movie. First, your AI looks up what it thinks is a totally legitimate DeFi portal. Next, it reads a rigged site filled with invisible HTML instructions. And finally, the AI is completely manipulated into executing unauthorized digital asset transfers straight to a hacker's wallet, and it does all this without ever asking for your human approval. And this right here is exactly why you have to lock down your digital security setups. In Zscaler's testing, 4 out of 26 top-tier large language models were successfully hijacked into sending money. So yeah, even the most futuristic AI mechas can be weaponized against your own portfolio if you aren't paying attention. Section 5. Navigating the fragile intersection. What this means for you. Putting it all together, we are sitting right at an incredibly fragile intersection. You've got intense downward pressure from strategy's corporate sell-offs and regulatory limbo, and it is directly colliding with these massive structural upgrades and ETF inflows over in the altcoin ecosystem. It's basically a perfect storm of opposing market forces, creating a super tense standoff. So, as the neon dust settles on today's action-packed market, look at your portfolio and ask yourself, is this extreme fear level just the ultimate bear trap designed to shake out weak hands? Or is Ethereum's mecha upgrade providing the foundational armor for the next massive bull run? One thing's for sure, you better be prepared for the volatility ahead. Thanks for joining me for today's explainer, and keep your shields up.